Thank you for joining me for this week's video about what makes the market work. And if you enjoy these videos, please remember to subscribe to our channel, comment, or like us below. So what I want to look at is why sentiment is always important to investors. A lot of investors look at indicators like momentum or valuation. These are certainly important, but there's more information about the market that is often overlooked, and that's sentiment. This is how investors feel about the market. And it's important to consider that because for investors, feelings often translate to actions. Now, there's a number of indicators that are used to track sentiment. The American Association of Individual Investors has a long history of tracking individuals. National Association of Active Investment Managers has a shorter history, but they look at professionals. And these surveys might be overlooked by some investors because they're not based on price action, but they tend to lead price action. And surveys are actually a widely used technique. Economists use it, and the surveys of economists, at least those maintained by the Philadelphia Federal Reserve, tend to have some degree of accuracy. So if you ignore sentiment, you could be missing out on an important piece of information. Sentiment, as I noted, drives prices, and this formula shows why. It simply shows the current market price, the character on the left side of the equal sign, is equal to an opinion factor, sentiment, and valuation. Now, sentiment, the factor on the far right, is squared because it determines whether the market is above or below its fair value. Fair value changes slowly. Prices change all the time. If sentiment is bullish, investors are buying and they are pushing prices above calculated indicators of fair value. So sentiment is what determines whether the market is going up or down, whether it's overvalued or undervalued. Sentiment, in other words, determines momentum and valuation. Interpretation of sentiment indicators is often fairly simplistic. The most widely used application is contrarian indicator. So as a contrarian, you assume the majority is wrong. When everyone's bullish, you're bearish. There's an appealing logic to that. The bull market ends basically when we run out of buyers. When no one has any money left to put into the market, it can't go up anymore. Bear market ends when we run out of sellers. So there's a certain appeal to that kind of logic. Now, looking at the surveys, AAII has a long history. Same question. Over the next 6 months, do you think the market's going up, down, or no change? And current answers are largely in line with historic averages. Slightly higher than average number of bulls, slightly lower number of bears than average, but not dramatically so. Number of neutral investors right there at the average. History shows the most important number in this set is neutral. That's the investors with money on the sidelines. When that number is higher than average, we tend to see stocks go up. So until that number falls low, and none of these readings are extreme enough to really get concerned about, we could see prices continue to drift higher in the current market. Professionals also slightly bullish. Here we see the NAAIM number. That's the percent exposure, and it varies from 0 to 200. As you can see, the blue line, the NAAIM number, closely tracks the S&P 500 in direction. So we've seen a mild sell-off. Members are now underexposed to the market, just at about 50%. That means they have a lot of cash. They have potentially enough cash to more than double their exposure to the stock market because many use leverage. This, slightly bullish. Overall, while research says the high neutral ratings are the most bullish, the data isn't really telling us there's anything to worry about. Sentiment shows that additional gains in the stock market are possible for now. We don't have a clear-cut all bull reading. We also don't have a clear-cut market top reading. There's room for more upside, which would shift sentiment, and that's what we need to be watching for. Again, if you like these videos, consider subscribing, liking, or commenting. Thank you.